Okay, thanks very much for joining us. Sorry about the delay. We had a bit of a technical issue that we had to deal with, but I'm very glad if you're still here watching. My name is George Turner. I'm from Tax Justice UK. And today we have this fantastic question and answer session, a couple of presentations from two people who are really at the heart of the whole Paradise Papers leaks. So to my right here, I've got Juliette Garside, financial correspondent with The Guardian, and one of the lead journalists who worked on both the Paradise Papers and also the Panama Papers before that. And to my left, I've got Simon Bowers, who is from the ICIJ itself. That's the organisation based in Washington, DC, that was responsible for coordinating the global effort to reveal the Paradise Papers leaks. So we're going to start off with two presentations, one from Juliette, one from Simon, talking about the stories that they did. And then we're happy to have your questions answered. So if you're watching this on Facebook Live, put in a question in the comment section underneath the live feed. Start asking the questions now, and we'll collect them and put them to Juliette and Simon after they finish their presentations. Don't wait till after the presentations. So if we could start maybe with you, Juliette.
Yeah. Hello, everyone. Thanks for tuning in and for being patient. So I thought I'd give you an overview of the different kinds of things that we found. I mean, The Guardian, I think, published something like 40 stories. We spent a year looking at this data, gradually uncovering stories, mainly about UK residents, companies, that sort of thing. But there were 13.8 million files to look at. We in no way looked at all of them, but we did find quite a range of. Just to organise this material, I could talk you through the kind of different levels of wrongdoing or unethical behaviour that we found. So one of the kind of most high-profile stories was about, certainly in America, was about the US Commerce Secretary Wilbur Ross, who's a member of Donald Trump's administration, a member of his government. And what became clear from looking at his business interests in the papers was that he had a stake in a shipping firm that had some very lucrative contracts to transport oil and gas for a company that ultimately belongs to Vladimir Putin's son-in-law. So they were essentially in some major business deals together. So I would class that as a hidden conflict of interest. And we had a very high-profile case over here, which is a less kind of startling conflict of interest, but it is one nonetheless, I think, which is the case of the Queen and the way that her money was managed. So some of it was invested in a hedge fund that in turn invests in other hedge funds. So it's quite a sort of laddering of companies in her investment structure that went via the Caymans and ultimately ended up in some back in the UK, in some UK businesses, one of which is Bright House, which sells household goods, sofas, washing machines, that sort of thing on hire purchase. So you take out a very expensive loan in order to buy your sofa, and then you gradually pay it off. And the company was fined £40 million earlier this year for abusing the law in terms of with its customers who are among some of the least wealthy families in the UK. So I think for her there was sort of moral conflict of interest there. And then finally there was a member of the House of Lords, Conservative peer, a lawmaker, makes laws about tax and trusts and that sort of thing. Lord Sassoon, who's an ex-Treasury Minister, was a Treasury Minister under David Cameron, and he was one of the beneficiaries of a $250 million offshore fund, which he'd never declared to Parliament because he didn't have to, although he was allowed to make laws that concern funds like these. So there's conflicts of interest, and then we also found cases which we think are potentially open to challenge for illegal tax abuse. So these are cases where the taxpayer could be found to have broken the law and could then be subject to a fine, as well as having to pay back the tax owed. And some experts who looked at the material said that in some instances these could be instances of tax evasion, which is actually a criminal offence. Now, cases that could be open for challenge include the case of a chap called James O'Toole, a lawyer and a tax expert who ran an aggressive tax avoidance firm called Aston Court, self-described as a tax alchemist, and he's actually been under, he told us after, as we were getting ready to publish, that he's been under criminal investigation for his work there since 2013 by HMRC. And his clients included all sorts of people, Aston Court's clients included the stars of the TV show Mrs. Brown's Boys, and what they were using the firm's advice for was to receive income from the BBC and other sources, park it offshore, and delay paying income tax on it. It was coming back to them from offshore in the form of loans, and loans don't attract the same kind of tax as income does, which is why loans were used. So what O'Toole offered his clients was a way to transfer their assets offshore, so anything from property, boats, luxury items, cash, shares in companies. And essentially, once these assets were transferred offshore, they used Mauritius and the Seychelles, they stopped belonging to the people who'd originally owned them. And the clients, instead of being the owners of these assets, became investment advisors to the new offshore companies that owned the assets. So they could use the assets. So they would advise their offshore company to buy some jewellery or an expensive luxury flat or a watch. So James O'Toole bought himself a £25,000 Rolex, and in order not to fall foul of the law, he paid rent to the company that owned it in order to be allowed to wear the watch. We saw instances where private school fees were being paid via Aston Court companies that were set up as what now looks to us like bogus education trusts. And so the people who put the cash in would write to the trust and say, my daughter's a very deserving candidate for a grant from this educational charity. Would you please give us a grant to pay her school fees? And the trustee, who would be an Appleby employee, would then write back and say, yes, okay, I think you're a deserving case. So I don't know if you mentioned Appleby, but did you mention Appleby in your introduction? So just to explain, the data in the Paradise Papers comes from several sources. It comes from a leak of the internal data of an offshore law firm called Appleby. Appleby did two things. It gave legal advice from jurisdictions like Bermuda, Cayman, Jersey, Guernsey, Isle of Man, and it also had a fiduciary business, which is where they will supply you in exchange for a fee with a shell company and some directors from among their staff usually to be the directors of the company, and some nominee shareholders to be the shareholders of the company, all of which just serves to mask who really owns the company and benefits from it. That business has since been sold off. So that was part of the data. There was more data from 19 company registers from tax havens, so Malta, Bermuda, places like that. Bahamas. And then there was another offshore services provider from Singapore called Beja City. So but Appleby was really at the centre of this leak, and James O'Toole was working through Appleby. So there we see quite aggressive tax avoidance, which we think is open to legal challenge. We also uncovered that, and this I think is really a case of, if it is found to be tax abuse, of state-sponsored tax abuse potentially. So you've got the Isle of Man claiming to apply UK laws on import VAT. So when you import something into a country, you have to pay VAT on it in Europe. And we found hundreds of private jets were imported into Europe via the Isle of Man without paying any VAT at all, when we think in many cases some VAT should have been paid. It looks like the Isle of Man issued $1 billion worth of refunds to private jet owners that range from Russian oligarchs to Lewis Hamilton. And then we have cases which are probably legal but still really aggressive, and they just feel very unfair. They involve structuring layers of companies, the use of jurisdictions like Jersey and Luxembourg to give companies advantages that wouldn't be open to other companies. So you create an unlevel playing field in business. So we have Blackstone, which is a massive US investment firm, taking over Chiswick Park, which is a business centre in London. And they commissioned a 60-page report from the accountants, PwC, one of the big four accountancy firms. When you read it, you can see how PwC is listing all the taxes they can avoid. Corporation tax, stamp duty, withholding taxes, capital gains tax. It was all about minimising any profits from this venture. And then there's kind of things that aren't so much to do with the law, but are more to do with people's responsibilities towards the countries they live in, their society. So, I mean, again, back to Lewis Hamilton, we didn't just see that he imported his jet via the Isle of Man, we saw quite a lot of his offshore structure. I mean, he's already a tax exile in terms of where he lives. He lived in Switzerland, now in Monaco. So he's already been chosen twice to not live in the UK for tax purposes. He has a BVI company, British Virgin Islands company, which in turn holds stakes in various assets. So one of those assets is a Guernsey company called BRV, which has signed his contract with Mercedes, the Formula One racing team that he works for. And that racing team is based in Germany. And then he owns his jet through an Isle of Man company, and he also has a company in Malta, the 44 is his racing number, that was set up to handle income from image rights. So when he's paid to endorse a product, he could collect money through this company. And that's all owned by the British Virgin Islands. So what we see there is a very, very careful structure designed to avoid holding assets and collecting income in any countries that aren't tax havens. Even though really his roots are in the UK. He was born in Stevenage, he grew up here, he was educated here, lived in a council house here, he went to a state-funded school here. He learned to race in a karting track here in the UK. And his employment now is in another proper country called Germany, where people also pay tax. But he doesn't live there, he doesn't live in the UK. Someone actually...
He still has a little British flag next to his name, doesn't he? It's not a Monaco flag or a Switzerland flag.
On his helmet.
Yeah, when he goes racing.
Yes, and he wraps himself, which really annoys the German fans, he wraps himself in the Union Jack when he wins a race. And I think he was very much hoping, having become world champion for a fourth time this year, for a knighthood. And I'm not sure what these revelations have done to the prospects of that, but you can kind of see how the Queen, with her, a Cayman investment in Bright House, putting a sword on the shoulder of Lewis Hamilton with his offshore structure would not be great optics. So I sort of doubt that's going to happen, but famous last words. But I mean, and other sports stars have complained about when he got Sports Personality of the Year. I think it was Joey Barton who was tweeting away saying he shouldn't. He's a tax exile. He's not paying back in to the country that he benefited from. And I think the psychology of this is really interesting. So I'd love to hear from people on that. Someone worked out that it's possible he may be avoiding through these structures 15 million in tax each year, and that's enough to cover the costs of his home council, Stevenage. And then finally you had cases of political self-interest. So it was quite obvious looking through these lists of politically connected individuals that Appleby kept in order to monitor its clients, that many of them are pushing for a hard Brexit. So these are people with offshore interests who derive their money from offshore companies, structures that they've set up offshore, who are pushing for a hard Brexit, people who put money into the Leave campaign, or endorsed it through newspapers. For example, the Barclay brothers, who live in the Channel Islands and hold many offshore companies through Appleby, and own the Telegraph, which obviously was one of the main cheerleaders for Britain to leave Europe. The Leave campaign's largest funder, Nigel Farage's largest funder, and banks with his Isle of Man bank and fiduciary business, and Conservative MP Jacob Rees-Mogg, who set up his own investment firm, which, like most of these businesses, uses subsidiaries in tax havens, and Jim Mellon, who was a big backer of Brexit and in fact put Aaron Banks and Nigel Farage in touch, helped Nigel raise a lot of money from the city, and he's based in the Isle of Man, and he's got his private jet there. He was born in Edinburgh, by the way, so he also is essentially a tax exile. So, and then finally, I guess, the response. So once we published all this material, what emerged was that, I think even less so with the Panama Papers, David Cameron was Prime Minister this time around as Theresa May. He had at least argued for some time that while tax havens were free to set their own tax rates, they should be a lot more transparent. So they should have like the UK does, a list of all the companies that have that are incorporated in, say, British Virgin Islands, and they should publish who owns them, the names of the real owners. And Britain sits at this network of 14 or so tax havens, some of the world's biggest, but refuses to push through any legislation that would help clean them up. Now, Cameron argued for it. After the Panama Papers, he secured a concession from the overseas territories. So that doesn't include the Channel Islands, Jersey, Guernsey, and the Isle of Man, but places like the BVI and Caymans. Agreed to, and Bermuda agreed that they would make the information about who owned what shell company available to law enforcement within an hour's notice in emergency situations. So they would have to hold it centrally in order to be able to do that. And they did at least agree to that. But Theresa May's response was very, very mild. There's been no suggestion that there'll be any regulatory fallout. She's turned down calls to make those central registers of who owns shell companies public. And in fact, the then Finance Minister of Bermuda visited London early this year, and I interviewed him, and he said to me, since she'd taken over from Cameron, any pressure on his country and the other overseas territories to be more transparent, any pressure for that to happen from Whitehall had evaporated. And I think that's really clear. I think this government, this Conservative government, is on the side of those who use tax havens and profit from them.
Okay, thanks very much. Well, on that sad and depressing note, we'll have Simon.
The same was true in various countries around Europe, or almost all countries around Europe. The reporters on this project found the same when they bought products from Nike stores. So, for some reason, Nike is shifting all its profits to the Netherlands. Now, the Netherlands has a tax rate that's higher than the UK's tax rate. So, why is it doing that? And the Netherlands came up time and time again. In this project, searching through. Appleby has no offices in the Netherlands, but the Netherlands is critical. We discovered as a gateway jurisdiction to the offshore world. And what happens, and in particular, it's very advantageous to a multinational company that is looking to shift profits that relate to intellectual property. And what is intellectual property? It can be a patent on a drug. It can be a piece of software technology. In Nike's case, it's the swoosh. It's the brand and the trademarks associated with its sportswear. So what happens when all the sales revenues arrive in the Netherlands is before a tax computation occurs, a very, very large royalty payment is made out of the Netherlands in a manner that it couldn't be made out of many other jurisdictions in Europe. This royalty payment is shipped over to a Appleby administered company, or it was certainly for many years, in Bermuda. And this is the company that we really found in the data. It's a company called Nike International Limited, and it profits from all over Europe for about a decade were shifted first to the Netherlands and then on to Bermuda. And there's and obviously, the purpose of that is, Nike gets taxed in all European countries, including the Netherlands, but it doesn't get taxed in Bermuda. And there's a slide I'd love to show you, but it's basically, if I can draw it in the air, you can see Nike's tax rate overall. When you look at Nike's annual reports over many years, you can see Nike's tax rate bobbling along at 35% for many years, which is what you'd expect of a US company. And then it sets up this structure, shifting profits, and then there's a step change down, and Nike's effective tax rate drops dramatically, and the numbers tell it very, very cleanly. And you can also see there's another sort of red flag for this kind of multinational tax avoidance, that the amount of profits that Nike is parking offshore away from US taxation rises rapidly, and it now has over $12 billion parked offshore, which have barely been taxed anywhere in Europe, and are being kept from US taxation also. Now I want to move on to another example, which is Apple. Apple is the preeminent example of this kind of structure. It's a company that's done fantastically well. Obviously, it is, by times the largest company, listed company in the world, and it's hugely profitable. And most of its profits, about 2/3 of its profits, come from outside the US. But going back to first principles, the way tax is supposed to work is that your profits are supposed to be where you've created value, or where your business activity has happened. So we've got Tim Cook saying the value is created in Cupertino, California. But then you've got what the accounts say, and the accounts say that the profits are not arising in Cupertino, California. The profits are, for many, 2/3 of the profits are overseas, and substantially all of that profit is arising in Irish companies. And for many years, quite why that was happening was a mystery. And but then it became apparent that there was a certain use of Irish companies via a technicality. Apple was able to create an Irish company that wasn't tax resident in Ireland, and as a result, it was paying almost no tax. And that's how Apple were accessing this extraordinary low tax rate. Anyway, that's sorry for the long preamble, but that's the backstory to where we got. That became the subject of many investigation and enforcement action. The European Commission began a case against Ireland in relation to Apple, and that's where the Paradise Papers came in, and we started looking at what Apple did next, because Apple was forced to change its tax structure at the end of 2014, and we saw this remarkable exchange where Apple, through its lawyers, contacted Appleby, the law firm whose documents we were looking at, and you saw this exchange where they basically sent a questionnaire out to all Appleby's offshore jurisdictions and said, we have Irish companies, they need a tax haven jurisdiction in which to take tax residency, because the rules are tightening, and in order to keep our very, very low effective tax rate, we need this to happen. Can you help? And the kind of questions were sort of chilling, really, because what they wanted to know is questions like, in your tax haven jurisdiction, is there a credible opposition party or movement? And are there developments suggesting the law may change in an unfavourable way in the foreseeable future? And can an Irish company conduct management activities without being subject to taxation in your jurisdiction? And then those kind of questions were also wrapped in these internal emails saying Apple are extremely sensitive concerning publicity. You must discuss this only with people who need to know. You really got the sense that this is something Apple want to re-establish a cloak of secrecy that they enjoyed for many years over their Irish tax structure. I won't go into the further details of how that new structure worked, but suffice it to say that since the new structure that was adopted, which is the start of 2015, Apple's cash that it has is parked offshore has almost doubled, and it's now at $252 billion. I mean, it's just it's hard once you get beyond a certain number. It's hard to comprehend how enormous that is. But that's made them, that this is
bigger than the GDP of Ecuador.
It's huge, and it's and that cash is a strong signal. I mean, if that cash could be returned to shareholders would demand it tomorrow, but it can't be returned because there would be a huge tax bill attached to it, and there'd be a huge tax bill attached to it because it has that money represents profits that have barely been taxed anywhere else in the world. And I'll leave it at that. Thank you.
Okay, well, thanks very much. We've had a few questions from people who've been watching, and we've got Nick from Eastbourne, Mike, and Martin Clark, and actually they're all kind of asking a similar thing, which is, what can be done about this? And with sadness at the lack of political will, something you talked about, Juliette, and the way that politicians, maybe in some of these offshore jurisdictions, are overly compliant with the demands of multinational companies. So Mike, for example, asked, do you see any method other than the political process which the avoidance rules might change, given that the UK Cabinet has deep roots in the financial sector? Would it be more effective to work with an alternative G20 nation? And then Martin says, these companies are most of the politicians in their pockets. They spend obscene amounts of money lobbying Parliament. They employ MPs on their boards. They offer them jobs when they retire, when they're voted out. Most of our newspaper owners have opted out of paying that tax too. So they have the media on their side. How do we fight this? And Nick says, thanks for your very clear presentations. Thanks for your presentations. It seems to me clear that even the so-called legal routes of using tax havens and complex structures to avoid tax are profoundly unjust from the perspective of taxpayers with more modest means. Given that the political will exists to tackle the problem, by no means certain, maybe it means it doesn't exist, is there actually any robust way of shutting this down? So, I mean, maybe if we could have a few minutes from you each on what do you think the solutions might be, and particularly thinking about if there isn't a ready political solution, is there any other mechanism to pursue?
Well, I think we've now got a Labour Party that's got crackdowns on tax avoidance baked into its manifesto, and probably will even more so come any future general election. So, vote for a party who wants to do something about this. There's lots that can be done. Europe wants to do something. I think that they are acting. They have acted, as Simon mentioned earlier, against Ireland for letting Apple off all that tax. They've demanded a 15 billion euro settlement, 13 from Apple. They've acted against Luxembourg for allowing similar deals, and the Netherlands. And there's now, I think, one enforcement action against a rather obscure thing called CFC rules, Control Foreign Company Rules, in the UK. But interestingly, the Finance Commissioner of the European Commission in Brussels has said, as recently as last week, that he's considering enforcement action, which is what they did in Ireland against Apple, enforcement action against Malta and the UK. Malta has let yacht owners of VAT payments, and the UK's Crown Dependency, the Isle of Man, has let jet owners off $1 billion, up to $1 billion. It's issued $1 billion of refunds on VAT. Similar deal on private jets. So the European Commission can act and is acting in many of these cases, but unfortunately, we look like we're set to leave Europe by 2019. So if Europe wants to act, it's got to get its skates on, because there's not much time left for it to do anything.
You can take some sort of enforcement action against us when we leave.
Well, I suppose. I mean, one of the things that Europe is trying to pass through, which it had a go at this week, is a blacklist of tax havens. I don't think your organisation really cheered that.
But we said, interestingly, that the UK could find itself on that blacklist if it wasn't an EU member.
Exactly, and in fact, one of the criticisms of the blacklist was that it contained no EU member states, and realistically, that was the only way to get any EU member state to vote for it. You have to start with states outside and a set of criteria that people can go, hang on, that applies to the UK or that applies to Luxembourg, and then I think things gradually change within Europe as well. But yes, UK will leave. There's a grey list with 47 countries on it. Some of them, there's 17 countries that are on this list that have been blacklisted, and it's a really odd collection of countries like Mongolia.
Namibia,
South
Tunisia.
Korea, which are not like the most famous tax havens, and they're basically countries that didn't have political support within EU member states, and they ended up on the list. But the grey list is where the action is. The grey list is a bunch of countries that have been identified as in breach of the criteria they've set out for tax fairness and tax transparency, but who've promised to do something about it. So they include the places where the real action is. So all the British overseas territories, Bermuda, Cayman, British Virgin Islands, places like that. Some of those have been given a few months to get the house in order because they suffered hurricane damage. But Jersey, Guernsey, Isle of Man, they're on the list. And they've been told, you can, if you want to get off this grey list and not be blacklisted, you can no longer permit structures which allow multinationals like Apple and Nike to book profits on your island if they didn't really do any business on your island, if they don't have a substantial business on your island. So that's the very definition of a tax haven, isn't it? So the question is, well, okay, so they don't meet their promise to sort that out and they end up on the blacklist. Big deal. So what? What are the sanctions Europe's going to impose? And that's the next big difficult thing. But Europe could impose sanctions. It could tax companies very heavily for shifting profits to these countries. That would be the best thing it could do.
Simon, have you got any glimmers of hope that you can throw out?
I mean, as a journalist, to duck the question, I would say, it's not our job. You're a campaigning organisation. It's your job. But we come up with problems, and you can suggest solutions. But I would say that someone once said sunlight is the best disinfectant, and I think that is obviously an element to the mix. How much transparency we're going to see, that is helpful, but I think the whole history of tax avoidance, tax evasion, it is a cat and mouse game. You have the regulators who set rules and close loopholes, and you have the innovators, the tax engineers out there who come up with new ways around those rules, and it's all complicated by the fact that really there are lots of wealthy individuals out there and lots of wealthy companies who are very mobile, and they're prepared to shop around. Suddenly you get jurisdictions where their finances are stretched, and they start to compete for inward investment, and they suddenly you've got this massive tension at the core of tax policy. Is it about stopping abuse, or is it about attracting
industrial policy?
Yeah.
Well, I'll answer your challenge.
Yeah.
Which is, I think, one of the things. I think that the amazing thing in your presentation is the Tim Cook quote to say, all of this innovation comes from one postal district in the US, and then showing the profits elsewhere. And that really illustrates the problem is that these companies can locate profits wherever they like to in the world, but tax authorities only look at the local subsidiaries that are based in the countries where they operate.
Yeah.
So, the HMRC, it's a bit more complicated than this, but HMRC basically will look at Apple UK and they won't take into account Apple Bermuda, Apple Island, and if you've moved all the profits there, then there's nothing left to tax.
Yeah.
So what we really need to do is to get people to treat multinationals not as just a local subsidiary in their own country, but as single companies that exist globally. And you can do that. What you can do as a tax authority is you can say, Apple makes, let's say $100 billion a year, and we know that 10% of their employees, 10% of their sales is in the UK, so we will tax 10% of their profits, $10 billion. And then you can set your own tax rate. And that just cuts out all of these games very quickly. I think there's very little political will to see that happen right now. Indeed. So that's a very aspirational.
Indeed.
thing.
Sorry.
No.
I was just going to say. Another thing that's been sort of floated. In Europe, possibly a bit more realistic is a shading towards more of a tax harmonisation, and it's this thing called CCCTB, a horrible acronym, but that's something that is an absolute
potential game changer.
Yeah, that could be very, very interesting and could be a shading towards the kind of thing you're talking about. But obviously, the great problem the European Union has in relation to tax is it's not a core competency, and it's jealously guarded by member states.
And spoilers like the Netherlands and the UK who have an interesting
absolutely, and there's no way Ireland is going to surrender, shift towards tax harmonisation, or the Netherlands are, because the way that they've structured their economies is dependent on offering these tax advantages. So I think Europe's locked in this messy. I'm not saying the UK exiting is going to leave us in a position where, in fact, it's interesting that as soon as it became apparent we're departing the EU, George Osborne, even I think before he left, Number 11 Downing Street, was saying, quickly, we need to slash the corporate tax rate yet again. This may well be our response as we look to compensate for the economic advantages of being part of this club, as we may end up competing even more aggressively than we already do on tax.
Well, but there has been good news stories since the Paradise Papers. So do you want to talk a bit about the Isle of Man scheme with the planes that you worked on?
Oh.
Just got 2 minutes, Will tells me, before we
Okay, well, the Isle of Man itself called in the British Treasury to have a look at the schemes and see whether it was enforcing the law correctly, because it's a mini customs union with the UK, and for VAT law it has to apply the law the same way, the same laws in the same way. And what our reporting questioned was whether they were doing that. If your jet is used partly for leisure, partly for business, you can only get a refund on the VAT, which is 20% of the purchase price, if on the bit that was used for business. That's how they were getting refunds. They were saying, this is not a toy. This is how I earn my money, and I need it for travelling to business meetings. Therefore, I want a refund of VAT, just like a plumber might when they buy a van. And so I use it as a tool of my trade, so I don't have to pay tax on it, because the deal is later on down the line, I am doing a business which will generate revenues for you, the tax office. Except Lewis Hamilton, his structure means he will never generate any revenues for the British tax office, because he's very careful to keep nothing here. The revenue.
There's been movement on this, hasn't there? On the issue, there's been movement on the general issue.
So how do you mean? So they pulled in the Treasury. The Treasury is going to inspect.
Yeah.
And Europe has said that it will look at this issue very closely.
Yeah. So there is the potential for.
There is the potential, and I think also it's about reputation. So It's about the backdrop. You get at people not just through the law. I mean, laws essentially, they reflect what we want to be as a society, don't they? So if it's not acceptable for the Queen to funnel money offshore, then who is it acceptable for? Increasingly, companies are using offshore as an excuse to dismantle certain structures. I think there was an example the other week, and I think we'll see more of that.
Okay, fantastic. All right, I think Will is telling me that we've got to end it now. So thanks very much to Julia, and thanks very much to Simon for taking part in this. Thanks very much to everyone for listening and putting up with the technical difficulties and watching and asking questions. And see you all soon.